Good afternoon. This is John from the Vantage Markets Private Client Group, and here's your midweek market update. It's currently 12:30 on the 11th of Feb, and so far this week markets have been trading largely with a risk-on approach. We can see just looking at the charts that the S&P is trading at or near all-time highs, as well as the Dow Jones being at all-time highs. Looking at gold, we can still see some strong demand with prices now forming support above the most recent daily resistance, just above the 4,900 or 5,000 key level. Overnight, we had some retail sales data coming out from the States showing that we had a 0% increase in the month of December, or flat. And they were expecting for results of 0.4%, which is a pretty significant miss considering that December is typically a month of higher spending due to the Christmas holidays. The impacts on the US dollar were fairly minimal. Prices are now still sitting around their yearly lows. And just looking at an article here from CNBC stating that US retail sales were unexpectedly unchanged in December, putting consumer spending and the overall economy on a slower growth path heading into the new year. A softer economic outlook has strengthened expectations of lower interest rates, with traders pricing in 225 basis point rate cuts this year. So other than the retail sales data, we had some political headlines coming out from Trump on the situation in Iran, saying that either we reach a deal or we'll have to do something very tough. Looking ahead, we've got some inflation data from China today, as well as the US non-farm payrolls release, which is delayed. It was meant to come out on Friday last week. So this data is expected to show an increase of 70,000, which is up from last month of 50K, which is still sitting below the historical average, which ranges at around 100,000. So this data release should lead to some whipsaws in price action. However, once the dust settles, structure should still remain the same, with rate cut bets remaining steady. We got some data releases from the UK on Thursday, GDP and manufacturing production. They're expecting neutral to pessimistic data, which still increases Bank of England rate cut bets and puts bearish pressure on the British pound. On Friday, we got some inflation data coming out from the States. They're looking at a figure of 2.5%, so a decrease from last month's reading. Still above their 2% mandate, but I think that's being increased to a range of 2 to 3% now. So market risks remain supported by resilience in growth and expectations of policy patience from the Fed, but risks still remain around inflation surprises. So any increase in this data could lead to some volatility in the markets. And of course, with the labor market data tonight, any surprises could also lead to some market volatility. So that's a quick midweek market check in on price action and some of the fundamentals. Obviously, this commentary is for general information purposes only and should not be considered as personal financial advice. Thanks for your time, and as always, trade safe.